You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 29th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast, that's our live training room. 2 hours and about 10 minutes every trading day. That is reserved for members only and those who are taking our 1 week free trial. If you have not taken the 1 week free trial, go to mytradingiq.com. At the very top of the page, it says 5-day free trial, no credit card required. Just click the link, fill out the registration form. Do your best to fill it out correctly because it's an automated process and I want to make sure we actually get it. Then what happens, typically same day, we get your indicators indicating, get your desktop set up, and then your trial actually starts the following day. Now you don't have to worry about what day of the week or weekend or hour of the day you sign up for the trial. You get 5 consecutive trading days, even if it stretches over a weekend. So really it's more of a 7-day trial in most cases. And a 5-day. Maybe we should just change the name. Now, when you take the trial, you're not just getting access to the live training room, but you're getting access to all the resources that our passport holders have access to. Everything except the members only workshop on Thursday night. This is designed so that at the end of the 5-day trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Worked very hard to make it very simple. Trading's not easy, but it can be simple. You have to let it be simple. That's the key, okay? Now, when the live training room ends each day, we take a 30-minute break. Then we come back at 12 noon Eastern for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down the page where it says Afternoon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of that is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be times when you're out of the office, away from the desktop, but you'd still like to join live. And there'll be days when you're busy and can't join live but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. youtube.com/CFRN. You already have the YouTube part memorized, so really all you got to remember is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back a week, 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward, watch a little bit, pick another day. You'll discover the thread of connectivity, the thread of continuity, woven through each and every daily episode. youtube.com/CFRN. Okay, we'll open with our daily devotional and a word of prayer as we do every day. Then we'll get into the markets, the news. Then about 12:45, 12:50, Michael will join us and give us a recap of what happened this morning in the live training room. And then we'll go live on the TradingView platform for about 30 minutes, do some live trading, and then I'll wrap everything up with our good word for the day. Now, our current devotion is really a study on the book of James. The title of the devotion is Faith Works. The scripture I'm going to share with you today is James chapter 5, verses 7 through 12. I'm sharing from the Message translation. Meanwhile, friends, wait patiently for the master's arrival. You see, farmers do this all the time, waiting for their valuable crops to mature, patiently letting the rain do its slow but sure work. Be patient like that. Stay steady and strong. The master could arrive at any time. Friends, don't complain about each other. A far greater complaint could be lodged against you, you know. The judge is standing just around the corner. Take the old prophets as your mentors. They put up with anything, went through everything, and never once quit. All the time honoring God. What a gift life is to those who stay the course. You've heard, of course, of Job's staying power, and you know how God brought it all together for him at the end. That's because God cares. Cares right down to the last detail. And since you know that he cares, let your language show it. Don't add words like, I swear to God, to your own words. Don't show your impatience by concocting oaths to hurry up God. Just say yes or no. Just say what is true. That way, your language can't be used against you. Now, again, that was James chapter 5, verses 7 through 12 from the Message translation. So we're talking here about suffering and comfort. Unlike most people in our culture today, the early Christians likely expected Jesus to return during their lifetimes. Many believe that he could return at any moment. Today, anyone predicting Jesus' return is recognized as a false teacher. It's in Mark 13:32. But at the time, the disciples had seen Jesus ascend into heaven and hoped he would return soon. Acts 1:11. In the New Testament church, waiting for the Lord's return at times led to unhealthy inactivity. 1 Thessalonians 4:13. And today it can lead to unhelpful speculation and preoccupation. James mentioned that the Lord's return is a means to encourage his audience to see their suffering in light of the bigger picture. For James' audience, the reality of Jesus' return wasn't a distraction that led to speculative predictions and false teachings. It was a source of comfort and hope in the midst of difficulty and suffering. The word translated coming in our English Bibles was originally used to describe the arrival of a king. The repeated reminder to be patient was James' pastoral way of rightly focusing the believer's perspective on the suffering they were experiencing. The believers could patiently endure their suffering because Jesus would return as Savior and Judge. James opened his letter with the topic of suffering, and he closed his letter with a call for patience in suffering. It's a major theme of the book. James indirectly addressed forms of hardship in his teaching on the other topics. A right view of wealth and poverty will relieve suffering. A right view of our faith in action will relieve suffering. A right use of our speech will relieve suffering. Suffering always happens in a context, and the ultimate context is God's sovereignty. Yet the Bible never holds or attributes suffering to God. Adopting Scripture's perspective on suffering allows us to see it within God's providence, while also seeing sin and death as our enemies. Join me in a word of prayer. Heavenly Father, we ask that you help us to be patient and steadfast in all that we do. Teach us to endure hardships with faith, knowing that you are compassionate and merciful. Guide us to speak truthfully and to stand firm in our commitment to you. May our lives be a testament to your grace and patience. It's in Jesus' name we believe and pray. Everybody said, amen. Amen and happy Wednesday. Let me give you the numbers from around the world. Let's start here in the US with the cash markets, the indices, as they're called. The Dow down 369 points, almost 1%. NASDAQ down 80 points. S&P 500 down 35 points. And the Russell 2000, or man of the street, down 27 points. That's almost 1.5%. And we go to the charts, you'll see what and why. In the commodity basket, crude oil down 56 cents, trading 79.27 last. Gold down $17.50, trading 23.62 last. Silver up 15 cents, trading 32.28 last. Now, over the years, we've pretty much seen gold and silver kind of trade in tandem. You know, if one's up, the other's up. If one's down, the other's down. I believe we're starting to see a bit of a divergence, okay? I believe that silver very well may pull away and pull ahead of gold. But that's just an opinion, not a forecast. In the Asian markets at the close, Nikkei dropped 298 points. Shanghai gained 1.5. The Hang Seng fell 344 points, almost 2%. And in the European markets at the close, FTSE down 71. For the FTSE, that's almost 1%. DAX down 204. That's a little over 1%. And the CAC down 122 points. That's 1.5%. So, we had a mixed day in Asia because of 1.5 green on the Shanghai. It was a red day for the UK. And it is a big red Radio Wednesday here in the US of A. All four of the major indices pretty deeply in the red. It would take something short of a miracle, I think, to turn this day around, but the fact that the Dow has already hit on a Tuesday the lowest weekly trading zone, anything's possible. You got to always embrace all possibilities. And even if we trade below it, by the close of business on Friday, we very well may be back at it or above it. And it may happen sooner than that. We've got the PCE data coming and some other news this week. They can move the markets. And when this jury in New York comes back, they're deliberating now. When they come back with their decision, that will probably rock the markets. So I'm going to suggest that even if you haven't been following the trial, keep your eye on the news, because once they are ready to deliver their verdict, I don't care which way it goes, the markets will probably get extremely volatile. And while as traders, especially intraday traders, we love volatility, but it's got to be volatility that you're able to manage. And so when the jury's ready to deliver the verdict, just put the mouse down, let the fireworks happen. Don't have a fear of missing out, FOMO. Just let it happen. And when the market settles back into its rhythm, okay, now pick up your mouse. It's pretty simple. Now, we don't know when. Could it take them an hour? Could it take them a week? I don't know. And even after they deliver their verdict, then the judge, he can kick it. After making those people sit there all that time, he could kick it and give his own verdict if he wants. And then he gets to determine sentencing. Now, if it comes back as a guilty verdict, I think everybody who watches the news knows it's going to fall apart in the appeals court, but that's kicking the can down the road a ways. So we'll just wait and see what happens. All right. As I already said, U.S. markets are in the red after a spike in Treasury yields. Unsettled investors already weighing whether recent data will shift the needle on interest rates. Stocks are selling off as investors contemplate a jump in U.S. bond yields after a government debt auction flopped, reflecting worries that the Federal Reserve will keep rates higher for longer. The yield on 5-year treasuries rose to near 4-week highs yesterday, while the 10-year yield topped the key 4.5% level. Today, the benchmark yield inched up to trade around 4.57%. Those concerns appear to be eclipsing the hopes for AI growth that lifted the Nasdaq to a record high yesterday in the slipstream of NVIDIA's post-earnings rally. Investors are trying to puzzle out what Tuesday's stronger than expected consumer confidence print means for Fed policymaking. But they are braced for a long wait before we see any rate cuts after a litany of warning from officials. But we'll see. Now, according to the data, U.S. consumers felt more confident in May. Data from the Conference Board showed us yesterday. The main driver of this reading helps explain why other surveys show Americans feel dour about their economic prospects. And it reveals the backward problem facing the Federal Reserve's interest rate policy, which is that high rates are helping the wealthiest Americans who are powering the economy's surprising growth and making it hard for the Fed to enact the rate cuts it claims that it wants. The simplified theory behind raising and lowering interest rates is straightforward. Lower rates help the economy grow faster. Higher rates slow the economy down. The last 18 months of U.S. economic experience, however, make the second premise harder to accept right now. In terms of income, those making over $100,000 a year expressed the largest rise in confidence. On a 6-month moving average basis, confidence continued to be highest among the youngest under 35 and wealthiest making over $100,000. Wealthy households right now can earn upward of 4.5% in a high-yield savings account. See their equity portfolios go up 20% in a year and are watching the value of their real estate holdings rip higher. Those folks want nothing more than for rates to stay high. Is the deck stacked against you? Seems like it, huh? Now, politics and the financial markets make for strange bedfellows. Now, this happens all the time. This is not a one-off. The Cleveland branch of the Federal Reserve said Wednesday that Beth Hammack, a former executive at investment bank Goldman Sachs, would be its next president effective August 21st. This history of people going from Goldman Sachs to the Federal Reserve, Treasury. I mean, this has been going on longer than I can remember. And you can do your own research. It almost seems as though shouldn't be fair. But then nobody said life would be fair, did they? And last, Jamie Dimon, modern day Willie Sutton, who announced yesterday, or we read yesterday, his announcement about retiring. Today, he says he expects problems to emerge in private credit and warned that there could be hell to pay, particularly as retail clients gain access to the booming asset class. Do you want to give access to retail clients on some of these less liquid products? Well, the answer is probably, but don't act like there's no risk with that. According to Jamie, retail clients tend to circle the block and call their senators and congressmen. JP Morgan and other lenders have been competing with the $1.7 trillion private credit industry. Giants such as Apollo Global Management taking on ever larger deals, but banks have sought to make inroads of their own. Dimon's company has earmarked more than $10 billion of its own balance sheet for direct lending and is putting together a co-lending partnership. Its asset manager is also on the hunt to buy a private credit firm. Hey, when you have incredibly high interest rates, who wouldn't want to own a direct lending firm? It's literally a license to steal. Logic 247. That's our 24/7 around-the-clock E-mini alert service. We're in week 304. Over the last 304 weeks, we've issued over 16,700 individual handcrafted alerts. What we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. We had a holiday Monday. This recap was done this morning at 7 a.m. At the time Valerie did the recap, we had issued a total of 15 alerts. Still waiting on the outcome of 3. That gave us 12 actionable alerts, of which so far nothing has been stopped out. I'm sure that'll change by the end of the week, but again, over the last 304 weeks, what we've averaged is 20% or less of the alerts being stopped out based on market structure. And that simple process we teach all of our passport holders in their one-on-one private mentoring sessions. Now, Logic 247 has been around for 304 weeks, but about twice as long we've had our original alert service, the concierge trade alerts. They're a little bit different in a few different ways. You can read that if you want. I need you to hold on for a minute, and I'll be right back. Boy. All right, we're back. CTAs are published as a static report shortly after the Globex opened each evening. Last night, the Wednesday session started at 6 p.m. Eastern. 5 minutes after the open, out come the alerts. I'm not always able to get them out that early, but when I can, I try to. First thing you do when the report comes out is look for the markets that you actually trade. Make a note of where price is at the time the report is published. It'll always be between these two numbers. Draw a line in the sand here, line in the sand here. Those will serve as great visual cues to keep you on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. BBC is just the green line you see on my chart. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices, relative to whatever time frame you're looking at. Be daily, 30-minute, weekly, monthly, 5-minute, doesn't matter. Now, with the logic alerts, I look left for you to spot the obstacles. The purpose of the alerts is not for you to just trade the alerts and not have to learn how to trade. As long as you're dependent on someone else to tell you when to get in and when to get out, you'll never trade for a living. You've got to learn to read the chart and understand what it's telling you. That's the purpose of the illogical alerts and the CTAs. Use them in the manner I went into detail yesterday and the day before, how you draw those horizontal lines. If you missed it yesterday, go to youtube.com/CFRN and have a listen. Also, you're going to learn once you go from the logic to the CTAs, and you could use them in conjunction. But again, the point and the purpose is to teach you how to understand what the chart is telling you. And based on that, what action you should take and when. You'll also learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night, 6 p.m. Eastern, they close Friday afternoon. Price is always trying to reach a weekly trading zone. Price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th of 2009. They come out every Monday morning, 6:15 a.m. Eastern. This way our members have a chance to get them on their charts before Wall Street even wakes up for the week. Once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just resist the urge to make it more complicated. Trading's not easy, but it can be simple if you let it. And as long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. And I would say that today is a really good example of that. Red candle. Oh, is that a sign to buy? I wouldn't. On a green candle, yeah, I'd be looking for opportunities to get along. Absolutely. But on a red candle, you're looking for opportunities to sell. What you got happening here is price has already, once the step line crossed blue and climbing, we got the retracement to the 24% fib based on just the last leg up. We got two sets of fibs here. We got the October 27th low to the all-time historic high. Then we have just the last leg, which is April 19th. to the all-time historic high on May 23rd. And we also have fib extensions here based off this entire move. So what's happened? Price came down to the 24% fib, and what do we expect to happen? A bounce. What did we get? A bounce. Consolidated for 2 days. Blue and climbing turned to red and falling. Now we've come down and touched the BBC and the 24% fib. Now that's support times 2. But this is our second time down. We may continue lower to the 38. We may bounce again. We may consolidate sideways till we get that PCE data later in the week. I encourage you, whatever you trade, whether it's futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart before you begin your trading session. Why? Because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. Institutional traders trade in incredible size because of their account size. And as a result, they are the ones who literally move price. So, you mean I have a chance to look over the shoulder of the guy that's actually going to move price? That's a pretty good deal. And it's free. Now, also, you would know, as this candle has been red since the open last night, you're expecting support right here. So you knew to take profits, okay, at this area. Because the highest probability is for there to be a bounce. And there was. But with red and falling overhead, and all the major indices in the red. Now the pullback to the BBC, as you can see, it holds more often than it doesn't. Okay. But eventually it trades through, like it did back on November 2nd. Oh, like it did here, here. We may get a bounce because this is really the first time we've lined up with the daily BBC. But it'll probably be short-lived. The step line overhead is resistance. Red and falling is definite resistance. So I'll be waiting to see a break of that 24. And then there's a nice trading opportunity down to the 38% fib retracement. Looks like that's about 52.18. Call it 20, 70. That's about 50 points right there for your next major support. But you'll only be aware of that if you take 2 minutes to look at the daily chart. So if you make that a habit over time, you'll see your trading results change. All alerts are created on the 30-minute chart. Both the logic alerts and the concierge trade alerts. Here's where we opened last night. Immediately got below the BBC, so we expect lower prices. We dropped to the weekly zone. When we drop to a zone, we expect support until proven otherwise. When price encounters a weekly zone, 70% of the time you'll get this consolidation. 20% of the time you'll get this rejection. 10% of the time, the slice. That's when price on a 30-minute chart slices through a zone like it's not even there, but then retraces When it runs out of steam, it pulls back to the zone it sliced through and continues in the direction of the slice. Now that's getting into last week. This is Wednesday, Tuesday, Monday. This is way back over here on Friday. So I'll show you a better example when I see one. So after consolidating, we continue down to the short target. That target look at that low Friday, that low yesterday, and that support right there, bounce. Should have been prepared to take profit there. It's more than enough to get your goal for the day. Little bounce, and then we continue down to the zone, 52.97/52.98. Remember, when we drop to a zone, we expect support. So what we got, it bounced us back up to the short target, resistance, and then we continued all the way down to here. And if you look left, you'll see why the market turned there. Now we have a situation where price is trapped between resistance at the BBC, support at blue and climbing. So we need to see price get back above this zone or drop below this low right here. And then you can trade that down to this low. And if we trade below that low, then you can take it on down. In fact, there's an alert in the logic channel for just such a trade. On the Dow, here's where we opened last night. And down we go to the target. Catch a little bounce. Trade through the target. Pull back up and find resistance. And now, here's the lowest weekly zone this week for the Dow on a Tuesday. And we're consolidating. Remember, that's what happens 70% of the time. When we reach the lowest weekly zone or the highest weekly zone in any market by Tuesday, today's actually Wednesday, but we didn't have a Monday. We had one, but we weren't here. So I would say there is a pretty decent probability that we will end the week higher than where we are right now. And that will be part of this potential bounce that we get off the BBC and the 24% fib retracement of the last leg up. Now, the 24% retracement of the entire move is right here, below the 62 of the last leg up. On the Russell, here's where we opened last night and just dropped like a rock. Right to the target and the zone. We hit the zone, we bounced, got below the zone, pulled back up, resistance. See, first it was support, and it was resistance. And down we go. And we've been consolidating for hours at the zone. Remember, that's what happens 70% of the time. The lowest weekly zone for the Russell is down at 2010. On the NQ, here's where we opened last night. Got below the BBC, dropped to the target, to the tick. It was defined yesterday. Support. Bounce. Leg. Retracement. And then here, we sliced through the zone, but we did not retrace back to the zone. That's an anomaly. Okay. See, resistance, resistance, rejection, rejection. Price drops to a zone, think support. When it rallies up to a zone, think resistance until proven otherwise. It's really pretty simple. Now that we've gotten back above the BBC and above this zone, watch this area here where the bearish cross took place. There's a high probability the market will find resistance there. On the ES, I posted yesterday in the discussion group a chart. See this bullish cross right here that led to the extended move? When price revisited that area of the bullish cross, the market found support. Happens over and over, again and again. So the NQ is now back above, and that's far from the lowest zone. We got several more zones below. On crude oil, here's where we opened last night. We dropped to the BBC, the pullback holds more often than not. We didn't make it all the way to the long target, but there was plenty of room to get your goal for the day. This candle opened at 80.24 and ran up to $300 per contract traded. Then we get below the BBC and we drop right to the short target. Now we're consolidating at the zone, as happens 70% of the time, and the step line is about to cross red and falling. So off of this support, watch for a bounce up to the BBC. Still got a couple more markets to cover, and we'll do that when we come back. Right now, Michael's going to give us a recap of what happened in the live training room this morning. Then we're going to go live on TradingView for 30 minutes. Then I'll be back.
All right. Let's get that done. Bring it over here. Hold it. All right. Should be looking at my screens now.
We are now. Looks good.
Excellent. Good. Here we go. Good afternoon, everyone. Today is Wednesday. We're halfway through the week. It's hump day. The 29th day of May, 2024. If you have not taken a free trial with us and you want to take a free trial with us, then you just need to go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. All right, click on the purple button and it will bring you to, well, bring you to this page. Now on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom here, if you have NinjaTrader, give us your machine ID, not your Ninja ID, your machine ID. Okay, and if you have TradingView, give us your login ID, all right? Not your email address, your login ID. All right, hit register. When you hit that register, you'll be sent everything you need to get into the room in the morning. And if you fill that information out, we'll be able to enable the indicators for you, so you get your indicators indicating as soon as possible. All right. Now, we didn't do a lot of trading this morning. Well, I guess we did. We did 11 trades, which is more than yesterday. But today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We have 2 days left in the month. 30 and 5, 31. 2 business days left in the month. Today we got 68 ticks on the NQ, 9 ticks on the YM, and 4 ticks on the ES. Now, 10 and 4 is how we got the goal for the day. We're at exactly $100 a contract when we got the goal for the day today. It took 7 minutes and 2 trades to get to $1,700 with 17 contracts on. And we took a total of 11 trades this morning. So on the month now we're up $6,200. That's over 20 business days, averaging $310 per contract per 2-hour business day. Curious about something right now. Something just bumped up over here, and this. Let me look at this. Hang on, I'll look at it with you in a second, in a minute too. A couple of minutes anyway. All right. Good. So on the year now, well, on the month, we're at $6,200 with 20 business days, averaging $310 per contract per business day. On the year, $39,935 401 business days, averaging $395 per contract per 2-hour business day. Now, in here, this is where you really want to be consistently profitable, day after day after day, getting your goal. That is right in here. Now, if you were to start with one contract and add one contract per month, earning $2,000 per month, all right, quit trading when you get your goal for the day, the goal being $100 per day, profit, gross profit, $100 per contract per day, and quit trading. You would have only had to work 35.81 hours so far this year. And if you added one contract a month based on those earnings, you would be averaging $1,200 an hour right now. If you started the whole process like I did last year, the beginning of January of 2023, you would now be averaging $6,038 per hour, quitting when you get your goal for the day. All right. So that can take a second to do the math, I guess, with you if you want. So it's $6,038 an hour if you quit when you get the goal for the day. Now, if you traded the whole morning session, you didn't just trade $35 an hour. If you traded the whole morning session, you had 101 days, not 35.81 hours. You had 101 days, so it was a minimum of an hour. So it would be a minimum of 101 hours. And usually it's going to be more than that. It's going to be like an hour and a half. So if you go, I don't have my handy calculator open. There it is. If you do 101 times 1.5, so 151 hours and 597 divided by 151, $3,900 an hour is what it worked out to be. If you traded the whole morning, started with 17 contracts like I did, and worked your way up, $3,900 an hour. Whereas if I were to quit just getting the goal for the day, or almost double that, quitting when I get the goal for the day, less commission, less stress, less everything. $6,000 an hour versus $3,953 an hour. The 24/20 blueprint. It's there for your health. Less stress. All right. Let's get into the actual trades. Okay, I believe they're on this one. And we'll start out with Russell. We didn't trade a single time on the Russell today, but we can look at it anyway and see. Oh, I guess we did trade. What? Is that today? That is today. We traded twice on the Russell, and I didn't write either one down. All right. Well, we got a break even on that first one, and we got some profit on the second one. Oh, this isn't the Russell. This is YM. Oh, good. I was going to say, man, I'm losing it. All right. We did trade the YM. Our first trade on the YM was right in here. We got 10 ticks profit on that one. And then I ended up missing these beautiful trades right through here. Beautiful trades right through there. And look at the leg lengths on that. I know leg lengths is in tomorrow's lesson plan, but that's just a beautiful display of the leg lengths in action right there. So we got 10 ticks on the first trade, then 2 ticks on the second trade to get us plus 12. And then we stopped here and went 2. And then we had a break even there, and we had a plus 7 there to get us back up to plus 9. And that is where we ended it. Right? And that is where we ended it for the morning. I started the lesson plan, and it doesn't look like I took another trade. All right, so during the break, there was this one blue arrow there that didn't really go anywhere. Looks like it didn't really go anywhere. It pulled back just enough to stop you out. And there was a lot of that today, I think. Pull back just enough to stop you out, or making just enough. See, this is the Russell all morning. You see how the pivots are so close to each other all morning? It's all morning. It was like that. And we didn't place a single trade this morning in the Russell. Okay. It got stuck in that zone and it just kind of stayed there. It was in the zone, in the zone, in the zone. I had a couple of blue arrows coming out of the zone right there. Would have been a break even. Couldn't take the second one. And back to the zone. Right here, coming out of the zone. It's kind of tough. Kind of tough. The ES, we did take one trade on the ES today, and that was at the beginning. Now, the ES gave more today than we took a couple of trades, it looks like. This is the whole day on the ES right here. The whole day. We took 4 ticks profit on this first one, and we took a break even on the second one. But that is more than we had available to us yesterday. All right, much more than we had available to us yesterday. It's twice as much as we had available to us yesterday. During the break, we really didn't have a chance. Okay, not really a chance there during the break. On the NQ, now on the NQ, let's go here. Let's go back this way on the NQ. Okay, we had the majority of the trades again today on the NQ. Well, the YM and the NQ had 6 trades, so it did have the most, but still, it wasn't a ton of trades. All right, so this one right here is not what we got the goal for the day. I believe we got the goal for the day with the YM in the ES combination. But we picked up 30 ticks on this first trade right here, and then the one right after it, we picked up another 30 ticks, plus 60. Then we had a break even right there, and right here we got another 8 ticks. That put us at 68. A couple more break even trades in here, one there and one there, and then the YM, the blue arrows on the YM after that were not. I believe there's one there that would have been a break even. I guess these couple right here that would have worked out okay. Well, the first one would have given you like 15 ticks. It went. You couldn't take the second one because the first one didn't put in over a swing. This one right here gave just enough to get the stop to break even, and that's in the break. And let me put this over here. There it is. Okay, and it actually just gave a long trade right in here that'd be stopping out right now. That's what we had today. Now, one of the things we looked at today, and one of the things that the reason why I have all these pivots over here on the Russell is because in the bigger picture, we looked at this on a 30-minute, and we're looking for areas down below for it to get to. I guess, hang on, I guess I'm just skipping right into the next part of it. It's 1 o'clock, and I was just going to skip right into it. If you have not taken a free trial with us, let me open up the here for a second. Okay. YouTube.com. Don't I have it already open? Here it is right here. Let me pop that open and look in there and see. All right, any questions over there? Okay, I do not see any questions over there on YouTube. I do see some people watching, but I don't see any questions. All right, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. When you click that purple button, you will be sent to, I just went to it, this registration page, where all we ask for is your name, your email, and phone number. Down at the bottom, you give us your machine ID. If you have a machine ID, give it to us, not your NinjaTrader ID, your machine ID. And give us your TradingView login ID too. All right, TradingView login ID is not going to be an email. So don't give us an email, give us your TradingView login ID. I had somebody give me an email yesterday. I can usually derive it from the email. Usually people use a portion of their email for their login ID, but that's guessing for me. So give us what the actual login ID is. That's how you take the free trial. Okay. That's here at mytradingiq.com. Mytradingiq.com. All right. Now, what I want to get into was this. The bigger picture stuff looking at this morning. Those of you guys that were in the room with us this morning. The Russell was the one that really I wasn't sure about. And I was saying, if this candle right here were to close down below everything, and you can see it didn't, so it's got a little resiliency here. If this candle were to close below everything, we're going to see it go all the way down, which is way down, down, down. But it didn't. It went through it. This morning when we were in this candle, I was saying, if we get up above this, we'll probably get up to here. You see we got up there, and it's kind of hung up there at the midpoint. I don't know what that midpoint is. That's the midpoint of the day's action. That's what I was going off of, the midpoint of the whole day's action. So you can see that's holding off right there. And I went back here and I showed how it was an area of contention there, 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 and again right here. If this bar at the bottom of this hour, they're down at 130, if this bar closes down below the weekly trading zone, there is a good chance that it's just the bottom's gonna fall out and we're gonna start going down. Right now, I was looking at that this morning. Dwayne's probably looked at this with you some, and the Russell was the big puzzle today because this morning we were in these bars right here, and I kept thinking it's gonna go up here to the midpoint between the two weekly trading zones, and at that point, the BBC would be right in the middle of that spot. Well, it hasn't done any of that. It's just gone sideways. So now what I was thinking at the end of the session this morning was, what about the downside? Where's the downside below this? Because this right here is as low as it goes when you're looking left right now. So what I did was I came in here and looked on the Russell in here with the pivot points on it like that. And we looked at it on a 30-minute chart. And on the 30-minute chart, you see right here, it works off of the last arrow, last blue arrow. So the last blue arrow was a bullish one. But with a 30-minute chart, you can do a bar replay. So I can take it all the way back here to the last blue arrow back here. Okay, do a replay back here. And then the table is going to fill up with all the potential targets on the downside. So it's already hit all of these except for this one, 2019.9. 2019.9 is the next target down that it does not hit, and that is way down here. All right, right now we're 20.99, so that's 80 points. But 2019.9, if the bottom falls out of this, and we get through all the lows that we had today, all the lows that we've already hit today, then 19.9 is way down there. That's what the Russell is looking at on the downside. Okay, so all this information is here in the table. You would have to scroll back to see that in here. If you look at all the pivots, you scroll all the way back here. Just keep going and going and going and going. I take all the drawing objects off of the chart. I guess there aren't that many. But 19.9 is back here on the third. You'd have to scroll all the way back there to see that. The one down below that is 2019.1, and below that 9.7. Right, so that's what it's looking like if things start to fall apart. If they really start to fall apart here. And we do have the beige book coming out in an hour this afternoon. Now the beige book, there's information in there that pertains to interest rates, and people can read into that what they want. Beige book could have an effect on the market. It has in the past. Right, but what table is helpful in this case right here. It does all that looking back for you and gives you all that information. And the table's helpful in a lot of cases. It gives you all your targets and all that stuff whenever you get into a trade. But it's really helpful in the looking left information to get all that information for you. It takes care of all that for you. All right. So it is now 1:06. I have 24 minutes left to see what we have for trades. The YM has got a trade right here. It hasn't gone into profit at all yet. That green arrow short. It was a pretty deep pullback for the green arrow. I was saying yesterday, and I've been saying for a long time, if it pulls back beyond the pivot, this pivot right here, it really loses a lot of momentum. Okay, now it's a trade. You can still get into it. I did. Here, I'll bring it over. I was just in the losing position on that a second ago. But now I'm going to lock in 5 ticks. It should go down below the prior swing low. And if you look at the leg lengths, there was a gap right here. I don't know why it had this gap right here, but if you look at the leg lengths, this has got a 30-tick profit target on it. It could hit all 30 ticks right now. I'm just going to lock in 10. Now, it could hit all 30 ticks right here because that leg length would bring it. Let's pin this. All right. Now, the 30 ticks was going to be right down here, but the leg length could bring it down to, let's draw that for you. Okay. From there to there. Oops. And that would bring it down here, which is just about where the 30-tick profit target was. I don't remember what my entry was, but it was up here somewhere, 58 maybe, and 58 down to 21. That's 37 ticks. So that's pretty good. Just out of that, it did not put in a lower swing, so I'm interested in taking another trade right there. Okay, over here on the NQ, we're testing the ribbon. We're in the overbought. Could go on a down close with that one. Okay, go on a down close, and there it is. And we're still overbought. That's why we still have the little red arrow right there. Here, I'll show you. Here it is. I'm going to bump my stop to break even. It went down to the weekly trading zone, which is all I would have expected out of this. So I'm going to start locking in profit. Okay, it made it down to the zone. Should have expected out of that. And okay, we got 2 trades off. Anyway, not too bad. 2 winning trades. Let me go out here and look in the YouTube. Nobody's asking any questions out there, but if you do find that you have any questions, you want to look at anything, just let me know. I did create something kind of new for you guys. I think I might have showed it to you yesterday, but here it is right here. The mid-trend trade, and this is on XOM on a 5-minute, but if you put the XOM on a 15-minute, on a 15 range, see, it's for those times where, you know, with the TV trades, a lot of times it's going to give you, if you didn't have this in here, you'd have your short right here. And if you miss that, you wouldn't get another trade until all the way over here. So that was pretty much all of Friday. You had your short right there, Friday at 9:46. And it didn't give another trade until the 28th at 9:30. So you would have missed all this in here. Now this is XOM, so you're not really going to be shorting XOM. But if you were buying puts right here, and if you missed that opportunity and you had another shot at it right here, you know, puts there, or there. At that, and in a little bit more detail, in yesterday's meeting that I did with TV trades. You can view that if you want. I don't have it running right here, but you can view that if you want. Target View Trades, go to webinars on Target View Trades, and I put that recording out there. It's right here. Do this, trades, TV trades recording here. It is right here, the one from yesterday. And I went into a lot of detail about the options because Jack was asking me a lot of option questions yesterday. What was I going to show you? There was something else I was just going to show you about that, but I won't do it right now. Oh, yeah, you can attend. I got another one scheduled for next week on Tuesday. If you want to sign up for it, just click right here to sign up for that one. Okay, next Tuesday at 3.
Speaking of options, the New York Stock Exchange is about to release a product where you can trade options on ETC.
Now, didn't they already have futures options on it? I know they have futures on it, but did they have futures options?
Not sure. I don't trade options. So.
Yeah, I don't know about that. But
I
yeah,
just
trading
saw
options.
the headline this morning.
I wonder how that's going to work. I mean, that's an
In fact, I
interesting theory.
posted it in the
in the
options channel.
Oh, that's right. I saw it in the options channel this morning. That's right.
NYSE is set to introduce options tied to Bitcoin's spot price via CoinDesk Bitcoin Price Index. So it's going to trade under the symbol XBX.
That'll be interesting to see how they build the algorithm around that for all the Greeks.
And the link is in the options channel, guys. So those of you that have access to the options channel, you can click the link and read the whole article.
Yeah. Let me show you where that is. For those of you guys that have access to it. Let me find it. The options channel. Here it is right here. Okay, this is what it looks like. It looks like this one right here. Okay. The options channel, click on that. And here it is inside Telegram. Okay. Those of you guys that have access to it. Yeah, so I want to show you this, the mid-trend trade. I mean, it's working perfectly. It's coming out where it's supposed to come out, showing up when it's supposed to show up. It had some bugs in it that I fixed last night. Actually, this one is not the recent version, but because one of the bugs was that this little button doesn't do anything. That was one of the bugs, but I fixed last night. So this one here that you're looking at is not the most recent version. You'll be able to turn it on and off, but I'm gonna roll that out tonight or tomorrow. The alerts, the warning. I also changed something else as far as the alerts go. You see, it doesn't say, the current one doesn't say warning anymore. If I hit cancel on this, and I hit save on this, and I hit refresh on this. And then go back out here and hit that. And I don't know why this is showing up in the middle of my screen now instead of on the side. Put it off and put a new one on. This one right here. Okay, shut that one off. And now in here, the oats, they now say, this isn't the right one either, but it now says, it doesn't use the word warning anymore. It uses the word buy notice or sell advance notice instead of the word warning. Why that's not coming up with the right one, but anyway. So there's a couple of little changes that I put into it. Now, that part of it anyway. Yeah. Okay. So this part came together, and to show the short opportunities, puts all that into. Okay. That is so that you could get in after the trend starts, and it'll give you an indication where to get in. I'm trying to create something that's going to give you an advance notice that this is going to happen, but it's hard to actually trigger in time, you know, at the exact right time. I mean, I wrote something for it, but it doesn't actually never happen because this happens too fast. But anyway, let's get back to trading. All right, so we're in a weekly trading zone right here. Now, I think that's a real weekly trading zone. I drew one this morning. I drew my own weekly trading zone this morning because I was trying to show something that had to do with the zones, and they never triggered this morning. Well, I weren't anywhere near a zone during the lesson plan, so I created my own. So I want to make sure these are real zones, and they are. So we're back here. We're at a weekly trading zone here. Now, I was saying at the bottom of the hour, if we close down below these weekly trading zones, that's going to be pretty bearish. And the Russell is on its way to start that right now. The Russell all the way down here is what it's looking at on the downside. All the way down here. This next pivot. And this could work out. Because this is the midpoint between the weekly trading zones. The way that this might work out is you end up going down here and getting a wick that comes down here by the end of the day, and then it closes back up here right at the midpoint. That wouldn't surprise me at all. But yeah, that to look forward to. That, I mean, that kind of goes back to what I was saying earlier. And because it's a 4-day week, my lesson plan is kind of mixed up this week. So I was trying to jam a whole bunch of things in it today. And one of the things I was jamming in was the weekly trading zones. And when we were doing that this morning, I think I was using this here. This one, yeah, these are the weekly trading zones I made up. And I was saying when you're above the ribbon, it's trying to get to the zone above. And I believe I made a zone above too, didn't I? Fabricate one above. I did one on both sides. Anyway, but when you're above the ribbon, it's trying to get to the zone above. When you're below the ribbon, it's trying to get to the zone down below. So that's on the 30-minute. That's why I was not seeing it right. There it is. Yeah, I did make one up above and below. So on the 30-minute, when you're below the BBC, it's trying to get to the zone down below. Right? When you're above the BBC, it's trying to get to the zone up above. So we're below the BBC right now. And on the 30-minute, we just got a green arrow short on the 30-minute. Now, this bar's got to close down for this green arrow short to actually trigger. So at the bottom of the hour, if this bar closes down, and it will, we'll probably have that green arrow right there. And that should push us through. This isn't a real weekly trading zone, but at that point, we should be through the current weekly trading zone right here. We will be through the current weekly trading zone. And the low of the bar right now is at 89. So that's going to bring it. Sorry, this is not the same. It's not the Russell. That's the ES. Okay, well, the same thing with ES. If the ES closes down right here at 89, it's just right here. That's not too far down. But the same thing with the Russell on the 30-minute. If we are, let's look at that. RTY. RTY. Here it is. Okay, we don't have a green arrow on the Russell. We have another black arrow. And if this one closes, well, it's going to close down on the hour. There's no way it's going to close up above that level. And the beige book comes out at 2 o'clock. That could be another catalyst to push it down some more. Right? So this green arrow over here did put us into a lower swing, so we can take a trade on a pullback right now. And what I was saying this morning, and what I've always been saying, is if you are below the BBC on a 30-minute and it's headed down to the weekly trading zone down below and you have room to run, let the shorts run. Try to stop close on the longs and let the shorts run. Right? I was able to do that twice this morning with the NQ, and I got 30 ticks on both. My one long trade on the NQ, I think, is when I got 8 ticks on. Okay. Does anybody have any questions on any of this stuff? Any of it? All right. We did have somebody that signed up for the trial during the break, and I don't see that person in here. Okay, so maybe tomorrow. I won't be able to help more with that. So right now, we just got short indications on the QQQ from a 5-minute. We had these mid-trend trades. This is the alert for the new thing that I created, the mid-trend trade thing. And in here, the QQQ right here, so short in QQ met at 1320 on a 5-minute. So that just triggered. Okay. It's suggesting everything's going to move down. Everything is suggesting everything's going to move down, and it wouldn't surprise me. I wanted to go look at one other thing quickly here. Let's go here to Forex Factory. Let's get that. This does have a little bit more information in it, like the beige book. If you go here and click on this, it says it's used by the FOMC to help make the next decision on interest rates. However, it tends to produce a mild impact because it receives 2 non-public books, the green book and the blue book, which are widely believed to be more influential in the rate decision. I've seen the beige book have a reaction on the market too. Okay, so that's what's coming out today, is the beige book. It's coming out at 2 o'clock. They have it as low impact, but you know, with everything as sensitive as it is around interest rates right now, could be. I mean, either way, you just trade what's in front of you, right? Over here on the Russell right now, it's saying to go short on a down close if it pulls out of the overbought. That's what it says. That's what you do. Yeah, 43. Where are you right now? $43.7. So you'd be selling 42.9 right now, like this. Okay. Now it just went up some more. Now it's not going to be anything. I was trying to show it to you. Okay. 122. We have 8 minutes left, guys. 8 minutes left in this. Let's see, that one and that one. All right. Just looking across everything in here. And nothing here, nothing here, nothing here, nothing here. Let's jump back out here. See what Bitcoin is doing today. With the new news, I'll put Bitcoin on a daily. Oops, oops, that's not really the Bitcoin I was looking for, but it is on the daily. And it's more of the junk that we were expecting, right? Remember I took a picture of that yesterday? I don't think I have a picture anymore, but I took a picture of this in here yesterday. And how about this is doing the same thing? This is the wrong Bitcoin.
Yeah, you got futures.
Yeah. Yes. That chart did not look the same at all.
Just click the crypto tab and there you go.
There it is. There it is. This is all the stuff that, that we were talking about. But I mean, Bitcoin itself is still, it was showing the same thing right there. But that is this stuff right over here happening all over again. I showed you a picture of it yesterday, where I was able to take a picture of that and just shove it right down below this, and you can see it's the same pattern. So we still got a little ways to go here of like sideways action, if it's going to follow the same pattern before we have a big move up. Okay, we'll see. Time will tell. That's what Bitcoin is looking like. One or more issues that require my attention. All right, so let's go back here. 6 to go back down to 4, and still nothing. Let's jump out here and look at anything out here. Now this was X1 today, but if we look at this on, let's just look at the NQ on a 15 range, where we're not really getting anything else. What we're doing in the morning. And when you're in a choppy day like this, you want to put the bias on there. Give you sort of a bias that's going to eliminate the jumpiness. Okay. So the trades today on the 15 range and the mid-trend trades, they didn't give a ton today. Had some nice ones early on. Yeah, they are right here. At the open, there's a little mix up right here at the open, little gains. And then I had a nice big one right there, another nice one right there. The mid-trend trades giving you good opportunities. That's enough to get your stop to break even. Again. That would have been a stop out. That would have been a stop out. That would have been a stop out. So of all the trades he gave, that would have been a stop out. Like 5 of them would have been stop outs if you'd done every one of them. Interesting stuff. All right, back here we have nothing going on here. We're totally flat and flat and flat and flat. There are no trade zones. So we're not going to force anything. We'll just wait. Okay. Does anybody want to look at any other symbol? Anybody? Look at anything else? Okay. What was that one yesterday, Dwayne? It was like Mr., but it wasn't Mr.
It was SMLR.
SMLR. That's right, it was on.
Scientific, similar scientific.
There it is right there. And this is on the daily. So it started out here, it had a good run today, and it's retraced 50% of it. And so now it's pretty much going to decide what it's going to do. The bottom is way down here. It's got a long way to go to find resistance on the upside. I don't know what happened that it sank this far, this fast, from March till now. But you see it's got support right here. And this is actually head and shoulder pattern building. That is pretty bearish head and shoulder pattern, looks like. Where did it come from before here? Down here. That low at 1912. Right, so let's see if there's an argument for any other kind of pattern. Wow. That thing really fell, didn't it? Now, why did it fall from 153 down to the all-time low in 1912? It's interesting. 153. When was it? 153 level? Last year, a year ago. Interesting. Make you wonder. This is a head, this is a shoulder, and this is a shoulder. So it's building a bearish head and shoulder pattern, but it's not really done yet. This neckline could just break and could go right above here. We'll see what happens. It's interesting. Interesting. MSTR. That was the other one, MicroStrategy. And that ended up blowing up all the things that we had. And if you look at this pattern right here, it's just like this pattern right here. And that run up, this pullback, that's where we're in right now. Right? It's got to have a catalyst. It's got to have a reason to move up. Because Bitcoin going up would probably be a thing that would make it move up. But if Bitcoin stagnates, then it may stagnate with it. All right. Well, if you have not taken a free trial with us, go out here to mytradingiq.com and right here, click on the purple button. It's going to bring you to this registration page where all we ask for is your name, your email, and your phone number. If you have a NinjaTrader down here, give us your machine ID, not your Ninja ID. If you have TradingView right here, give us your TradingView login ID, not your email. Okay, give us that information and we can get you all set up with your indicators indicating as soon as possible. All right. Yeah, that's all you have to do. All right. So with that, I guess I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. There it goes.
Okay, recap of the morning session.
Today it took 7 minutes and 2 trades to get to $1,700.
Good job.
Thank you.
Okay, guys, we'll pick up where we left off. We were on crude. Crude has now hit the short target. It's consolidating. It's been consolidating now for a few hours. The step line has crossed red and falling, so look for a potential retracement back to the BBC. If it overcomes the BBC, watch this bearish cross here, this potential resistance. On gold, here's where we opened last night. Came down to the zone. Price drops to the zone. We expect support till proven otherwise. This is where we traded through the zone, and it took us right down to the target. Bullish cross over here, and this low here. Gave us our target here. We hit the target, we bounced back up to the zone. Now notice, coming down, the zone was support. On the way back up, the zone was resistance. The zone is 2356/57. We've published the zones for our members every week since December 14th of 2009, almost 15 years. Price drops, support. Price rises, resistance. Support, resistance. Over and over, again and again. And right now it's showing us support. And the BBC right overhead is potential resistance. The pullback holds more often than not, whether it pulls back from above or pulls up from below. Pullback holds more often than not. Silver, here's where we opened last night. We dropped to the zone and the BBC, support times 2. Had a leg, a retracement, another leg, took us all the way to the target. We took out yesterday's high by just a little bit, so we're always suspicious of just a little bit. Back to the BBC. Back to the target again. You only need 2 pennies in silver to get your goal for the day. This candle opened at 32.27. Ran up to 32.50. About $1,000 per contract traded. And then back to the zone, consolidation, and then we drop right to the short target. We overshot it, looks like by maybe a penny. And as you can see, this bullish crossover here became support. And now we're almost back up to the long target. So sort of a sideways day for silver, but staying above $32. Anything above $31 is very bullish. Even above $30 is bullish. I still have an issue with my Euro chart, but I should have it fixed by tomorrow. So back, one last look at the daily chart. On the last leg up, the low of April 19th to the all-time historic high put in May 23rd. We've come down to the 24% fib retracement once. We've now come down to it twice. This time we've got the 24% fib retracement and the daily BBC. But we got red and falling overhead, which is bearish. So this may be, even though the pullback holds more often than not, this may be the instance where price trades through the BBC. We expect it to hold, but we know eventually it will trade through. And this could trade through. We're at the lowest weekly zone on the Dow for the week. We've been consolidating there for 1, 2, 3, 4.5 hours. Keep in mind that jury in New York can deliver their verdict at any time. And whenever it is, whether it's today, tomorrow, or a week from now, there's going to be extreme volatility, no matter whether the verdict is guilty or not guilty or hung jury. It's going to create volatility. So the best place to be is flat. Okay. But we need volatility as intraday traders, okay, in order to make money. But irrational volatility. Volatility is good as long as it's manageable. Okay. But those type of events, just like the FOMC, I mean, watch the fireworks. When things settle back to their normal rhythm, then pick up your risk. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have a teacher. When you become a passport holder, you'll have a live teacher, 2 hours every trading day, plus one-on-one private mentoring, and the strategy you learn and the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Also, as a member, you get the Logic 247 alerts, the Concierge Trade alerts, everything a trader needs, all under one roof, one low price. Just go to tradingiq.com. And now our good word for the day. What an insurance policy. Psalm 23:6 says, all the days of my life. Most insurance companies are trustworthy. They will cover you through most of the seasons and adversities of life. But not all insurance companies are that way. In some cases, the moment you make a claim against them, they either hike your premiums through the roof or cancel your policy. The insurance policy you have with God is awesome. Premiums were paid in the crimson cash of Jesus' blood when he spoke these words, "It is finished," which means paid in full. There are different kinds of insurance policies that cover things like fire, property, theft, health, vehicles, death. But the only insurance policy that can cover you beyond death is the one God offers. And you don't have to worry about reading the fine print, because he will not cancel it. Paul lays it out for us. Who shall separate us from the love of Christ? Shall tribulation or distress or persecution or famine or nakedness or peril or sword? In all these things we are more than conquerors through him who loved us. For I am persuaded that neither death nor life, nor angels, nor principalities, nor powers, nor things present, nor things to come, nor height, nor depth, nor any other created thing shall be able to separate us from the love of God, which is in Christ Jesus our Lord. That's Romans chapter 8, verses 35 through 39. Have you repented of your sins? Have you placed your trust in Christ to be your Savior? Then you're covered for time and eternity. Through many dangers, toils, and snares, I have already come. 'Tis grace hath brought me safe thus far, and grace will lead me home. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.